Good afternoon, boys. Today we're going to look at the whole picture with the topic concerning insurance. Now, when we look at insurance, we have two major types of insurances. We have non-compulsory insurance and compulsory insurances. So to start off with, we're going to look at non-compulsory insurances. You're going to have to be able to explain, describe, and discuss the following concepts. You're going to need to know what the average clause is. Now, under average clause, we have overinsurance and underinsurance. Okay? With over and underinsurance, you will need to explain the difference between those two. With regards to underinsurance, later on, as you go through the content, you're going to be asked to calculate underinsurance and what the value of that is. And then the final concept under non-compulsory insurance is reinstatement, what that term actually means. The next topic we look at is assurance. So we have insurance and assurance. Insurance is in case something happens. Assurance is as sure as something will happen in your life. So we all know that one day we will all die. So it's assurance for like a funeral benefit or retirement. So you need to be able to distinguish between assurance and insurance, provide examples of each, and then you also need to be able to give examples of short-term and long-term insurance. So an example would be short-term insurance would be vehicle insurance. Long-term insurance would be a life policy. The next topic is really important. It's called the principles of insurance. And there are 4 principles that you will need to be able to identify, explain, and discuss. The first one is indemnification. That means putting you back in the exact same position you were prior to the risk having happened. Then we have security, insurable interest, and utmost good faith. Following on that, you may be asked to discuss the advantages of having insurance as a business. Right, and now we are on to compulsory insurance. There are 3 types of compulsory insurance. CODA, you would have studied that in Chapter 1. The Road Accident Fund or the Road Accident Benefit Scheme, and UIF. Now with UIF, you are going to need to be able to discuss the benefits of UIF and when you would be paid out. So again, it's to be able to identify the type of compulsory insurance, explain and describe them. Then we look at the different types of risks that exist. You have insurable risks and non-insurable risks. So for example, changes in fashion, one cannot insure against that happening. Nuclear war, there is no insurance, so that it cannot be calculated. Whereas an insurable risk is something that insurance companies can calculate that risk factor associated to it. And that in a nutshell is insurance.